Hello guys and welcome back to the channel. So in this video I want to talk to you about how to survive the coming crash of 2022, and I hate to be the one to break it to you, but there is just too big of a storm coming, and I do feel that we are going to go into a recession, and I want you to be prepared for it, and I want to tell you what I'm doing to survive this crash and hopefully maybe come out winning at the other end. And as always, if you like the content, please make sure you hit the subscribe button, and if you want to go even further, you can check out the first link in the description box below, which takes you to the Patreon page of this channel, where you can support us for $5 a month, all the valuations that we use on this channel and all the tables, and you can play with them and see if they fit your thesis. So let's begin this video. So how to survive the stock market crash of 2022. So why am I so bearish? A lot of people have been saying that the mother of all crashes is coming, but this time is different because this time I'm fear-mongering you. No, I'm just kidding. So this time is really different because since I've been on the market, I have never seen such a perfect storm of, supply chains being messed up. This is obviously due to the prolonged war in Ukraine and Russia and the China COVID lockdowns and the world, reopening after COVID. Then you have inflation, and actually a week ago is when I realized that inflation is going to be way more stickier than people expected. That was due to, many factors. One of the things that is making inflation so sticky is that there has been so much money printed and people are coming out of a lockdown with a record savings on account. This has never been, the savings of people have never been so high in history. And the problem is that it clouds people's judgments that, you were in a lockdown for 2 years. And I'm sure you feel the same thing that, when you are, locked in at home, you don't need to buy new clothes. You don't go to restaurants, you save a lot of money, you don't go on vacations. And now that we are reopened, then you basically just need new clothes and you have the money saved up, and doesn't matter how much they cost, you just buy them. In my case, we haven't seen my grandparents in Hungary for many years, and we were going to see them but couldn't due to the COVID lockdowns, and now it doesn't matter how much the trip costs, we just have to go and see them. I'm gonna touch back on this, but another really big problem with the inflation is that the proposed handling on it take a very long time. Biden came out with this action plan on inflation, and because basically if the war in Ukraine would be solved, energy prices would go down, but it doesn't look like that war is going to end anytime soon, meaning it might go on for years. There is the supply chain issues, and because oil production is not being handled with Russia, so we need new infrastructure, and the new infrastructure that is proposed is green infrastructure, and this change is like, it's a decade if you're doing it lightning fast. So that's not a fast solution. Then, all the supply chains that have to be, that were in Russia and Ukraine and in China. In China, you either wait until the government reopens, which, can take a long time, or you just simply relocate your factory. That's not a fast handling. The factories that were in Ukraine and Russia, they have to be relocated, built up somewhere else. And that's also not a fast thing. And what happens when inflation is persistently high? You guessed it, the Fed is really aggressive, and they will keep raising the interest rates, and this will, one, push down the company valuations, but it will also make everything more expensive and slow down people taking loans, which will slow down the economy. And I think that we have a really very likely chance of the Fed overcorrect, because right now the people need to spend through all the stimulus saved up money that they have. A big part of the inflation is not actually caused by things that are in the control of the Fed, for example the war in Russia and Ukraine, and we are in completely uncharted territory. We have never had this much money being printed to the system, and going into raising interest rates at a time when there is like so much geopolitical uncertainty, and it's just uncharted times, and nobody really knows what is going to happen. And again, it's not just me saying this. This is Jamie Dimon, CEO of JP Morgan. He says, brace yourself for an economic hurricane. And obviously he's sitting on data that is very hands-on, very close to the fire, and he sees what people do with their bank accounts, and he is someone to be taken seriously. Then we have Mr. Musk, who is planning to cut 10% of salaried Tesla employees because he has a super bad feeling about the economy. Again, he has advisors. He is the CEO of two really big companies, SpaceX and Tesla. And what is he seeing? Are the orders, slowing down in Tesla? Car companies tend to do really bad when it's recession. Then there's this Meet Kevin guy, which I'm sure you know. He tweeted that since the 1950s, we have had 7 Fed rate hike cycles of the speed that we're seeing now, and a recession followed 6 of those cycles within 18 months. So this gives us a 14% chance of not having a recession unless this time is different. So what is the solution to surviving this crash as an investor? So why don't you just sell and wait out what's going to happen? The thing is that there's 2 objections that I have for this, and one of them is nobody can time the market and predict what the market is going to do. So the market has crashed. The Nasdaq is down over 20%, and there are some insanely good deals on the stock market right now. And true, it can go lower, but the thing is that the stock market tends to be looking into the future. So you never know. Maybe all these hardships that I was telling you about has been priced into the market. And if you are not buying when you have a good deal, then, you might miss out on a very good buying opportunity. And then, when the market starts going up, then you start buying at the top again. And there has been a research paper that has compared 3 types of investors, and one of them was, having it all cash. One of them was, trying to time the market. And the other one was just dollar cost averaging the whole way through a crash. And the one that was dollar cost averaging through a crash was doing like 2 times as good as the second best one. So your job when there is a market crash like we are already having, and who knows, it's going to be maybe much worse, maybe not, is to accumulate the shares of great companies at great prices. So there are things that, it's not enough with great companies. For example, everything here is just my opinion. For example, Shopify is a great company with a great future. But in my opinion, even after falling 80%, they're still overpriced and need to fall more. So, and then here's a very interesting thing that I realized, which is so not talked about by anyone on YouTube. And that is that so many people put the focus on how much return they're getting on their stocks. And I think it's a wrong thing when you are having a crash. And I actually realized as I was analyzing it that it's a wrong thing overall to focus on how much returns you're getting on your stocks. As long as you're not losing money, I'm going to explain this, you're going to be fine in the future. As long as you put your focus on the correct thing, which is increasing your income. Very interesting thing. If your goal is to get $1 million, the amount here is just to illustrate something. Then there is 2 factors that you can control. You can control the return that you're getting on the money and how much money you're investing. And if you take, everybody has a different situation here. Let's say that your income is, I have a family, so this is, very real to me. I have a multiple 100,000 income and our family spends about 80,000 a year. I know from what I read that an average US family can live on $50,000 a year. So let's say your family income is 50,000 and you're spending 50,000. So you have 0 money to invest. Somehow you had 10,000 from someone and you invest this and you're trying to get to $1 million, right? So here you can see that the only way that you can get to $1 million is within a reasonable time is that, either you go very many years or you increase the rate of return on your money. So let's say that you increase from 10% to 20%, then you're still after, 14 years, you're still only at $128,000. So now let's say that you increase to 30%. You're still not reaching $1 million. So with your 10,000, you basically, now we made it, you need to increase to 40% per year income. And you realize at this point, what you're saying is you are smarter than Warren Buffett, Peter Lynch, all the great investors because you watch some videos on YouTube or you think you found the next altcoin or I don't know what your strategy is, but you are basically saying that you're going to be able to get more return than any of these, most famous and best investors of the last, decades. It's very, very, if I'm being honest with you, and I need to be honest with you because that's kind of the point of the channel. It's very unrealistic and is never going to happen. So let's say that if you time the market perfectly and you spend a lot of time and you go in and out, maybe you can get a compounded return of 20%. Again, you have to spend a lot of time learning the stock market and doing, research, and it's going to be like a second job for you. Or the other thing that you can actually control, and this is going to be surprising, is your own income. You can instead invest into yourself. You can do a course on accounting, or you can do something that increases your income to, let's say, 80,000. I'm very conservative here because maybe you're able to increase your income way more than that. But let's say you just increase to 80,000, and even with the shitty and very unsexy returns of 10%, you make $1 million. And guess what happens if your family income goes to 100,000? Wow, you're at 1.5 million, even with a really shitty return. And I'm telling you, for most people that I have seen, it's way easier to increase their income than becoming a better investor than Warren Buffett and Peter Lynch. And statistically speaking, there is one Warren Buffett, and you have a 1 in 10 billion chance of being better than him. And there is millions of people who earn $100,000 and over per year, if not hundreds of millions of people on the planet. So statistically speaking, it's way easier to increase your income. And this is what actually you should be focusing in a crash, to increase your income so that you have more money to invest, and you should be acquiring great companies at great prices. So you should try to focus on being able to invest between 1,000 to 10,000. I mean, the sky is the limit, right? But let's think big, and let's say that you want to invest, I don't know, $5,000 to $10,000 per month. And, first, probably to really increase your income, you need to invest in yourself. You need to, read books. You need to do courses. You can watch YouTube videos. You can learn new things. I read a book on how to negotiate like Trump. It was written by his lawyer. I made $5,000 on the first negotiation after I read this book. It took me 8 hours to read the book, and it was an investment of $10. Then, there's all these websites like Udemy, YouTube, you can learn coding. It's unlimited what you can do. Use your imagination. Then you have money that you save up after you have invested in yourself, and then you need to acquire great companies at great prices. Again, I'm not going to tell you what to invest in. The investments that I really like and prefer are companies that you can buy, put them in a shelf, and then you are sure that they're going to be a good companies 10 years from now. Palantir is basically 100% of my portfolio currently. If Tesla drops lower, that is going to be another investment. But I'm sure that there's many other companies that are going to be around, and they're going to be like multiples more than what they are currently. So when I was thinking through this, because I'm very pessimistic on the market. I think that we are going to have a few years when the market is going to be flat and, really not going anywhere. And if you think about it, it's a perfect opportunity to really amass and, increase your ownership in stocks that you like. And I realized that this is also what actually you should be doing when the stock market is not crashing and we're not in a recession. And I feel that so many people are focusing on what is the next hot altcoin and where you can make 1,000x on your money. And it's the complete wrong focus. Because, for example, let's say that you could have invested in Tesla in 2012, but you only had $1,000. And yes, the stock went, 20, 30 times more. So now you have a $30,000 portfolio. But to be honest, that is absolutely not a life-changing amount. And, you couldn't basically seize the opportunity because your income was not at that level. So I think that it's very much underappreciated how much you can invest into yourself and how much that can, change your life. And that is what you need to survive this recession. You need to increase your income and need to acquire great companies. I'm very curious to know what companies you are looking to acquire and how you're planning to increase your income. And you can also let me know if you disagree with my message. Thank you so much for listening, and I will see you in the next video. Bye-bye.